I'm Erik. This is Jason. Good afternoon, everybody. Great to be here at the Power Players Summit. Jason, as you just heard, is the co-founder and CEO of DraftKings. This is one of the premier sports betting platforms. It has taken the gambling world by storm, and you'll find out in a moment what's about to happen to this company. Jason, let's begin with this. It's going to be a big weekend for either the Kansas City Chiefs or the San Francisco 49ers. Is it going to be a bigger weekend for DraftKings?
I hope so. I'm happy I just didn't fall climbing the stairs up to the stage, so anything from here is upside for me.
Can you share with us some of the metrics around this weekend, what the Super Bowl means for a platform like yours, how much volume you expect to do, and what kind of activity there is on your platform?
Well, Super Bowl, isn't just the biggest day in sports. It's the biggest day in fantasy sports. It's the biggest day in betting. So, for us, it's the biggest day of the year as well. It's our Super Bowl, so to speak. So, a lot of preparation goes into it. There's a lot of marketing work that was done ahead of time, a lot of product work. We're hosting games not just before for fantasy, but we have in-game fantasy with our flash draft and in-game showdown products. We're going to have a whole new series of prop bets. We have props this year on things like what color the Gatorade will be for the Gatorade shower. Number one prop bet again this year is the coin flip. Everyone wants to bet the coin flip. Tails is getting a little bit more action than heads. And pretty much anything you really can think of. You even can bet on where Tom Brady is going to go next year or who's going to win the Oscars. So lots of cool stuff going on. But the Super Bowl is the biggest day. It's when we get the most traffic and the most activity for sure.
It has been an eventful 4 years for DraftKings. Back in November of 2016, you and your largest rival, FanDuel, agreed to a merger. An awful lot changed since then. Bring us up to speed. What happened after that?
Well, the two of us tried to combine back, what feels like a lifetime ago, but you're right, it was only in 2016, and we actually ended up getting challenged by the FTC in 2017, which is hard to believe, only about 2.5 years ago when I found that out. So much has happened since, and really right around the same time, I think it was within days of finding out about that, we learned that the Supreme Court was granting cert in the New Jersey sports betting case. So it was almost like a signal for me of, here's the next thing. Here's, one disappointment, but then one exciting new opportunity emerging at the same time, the circle of everything, I guess. And I kind of knew right away that we had to focus there. So within a few days, I got my team together. I said, here's what we're going to do. We're going to walk away from the merger. We're going to lose fighting in court. It's not worth it. Let's just go ahead and focus on this sports betting thing. We need to go all in on that. And I think that's going to be the biggest thing that's happened into sports in decades. And everybody was obviously very disappointed that, because we have been telling everyone at the company to get excited about, and it's a shift too, right? You start, they're your biggest rival, and then you got to try to convince everybody at the company, no, we're friends now. Well, now we're back to beating each other up again. So, it was a shift, and that can be a big up and down roller coaster for people. So it's kind of nice to have the sports betting thing to get everybody excited and distract them from what was otherwise disappointing news.
Now, as I say, a lot has happened since then. You pointed out that the Supreme Court, or New Jersey won in its challenge to the Supreme Court, and now states other than Nevada can engage in sports betting. And I think that you're active in 5 states, if I'm not mistaken, 4 in addition to New Jersey. Most recently, you've agreed to be acquired by what is commonly referred to as a blank check company, but what is technically a special purpose acquisition company, otherwise called a SPAC, in a deal that combines DraftKings with a back-end technology company called SB Tech, and it will result in your going public. Why go public? So many companies have thrived so successfully in private, with private funding, without all the disclosure obligations. What's the appeal of going public to you, and why do it this way as opposed to an IPO?
Well, first, starting with why go public, I do think different companies, have a lot of different considerations And each one has, different math to do. For us, there were a lot of compelling reasons. One, we felt like this was the best source of capital for us, and we also thought, as per the deal we're doing now, there could be many deals done in the space, and having a public currency would be helpful. We also thought that public investors would find this very attractive, and it was an opportunity for us to get out there as the first and really create the narrative, which I think is really important. It's sometimes beneficial to ride the coattails in the short term, but over the long run, I'd much rather be the one telling the story. So we thought that was a pretty important point. Thirdly, licensing requirements for states for regulated gaming and betting are much easier as a public company in some states, far less stringent in terms of who has to get licensed, which, to put in perspective, we were first to market almost everywhere we launched. We were not first in Pennsylvania. We were actually a little bit late. We were several months late in Pennsylvania. It's because we had to get something like 20 or 21 shareholders licensed. If we had been public, we would have had to gotten, I think, 2 or 3. I mean, that's the difference. So it would have been much faster pace. And we don't want to hold back our product and tech people because, we've made a decision to make licensing requirements harder. And then the last thing that I'd say is I also think that going public really during this growth phase is a lot of companies stay private longer now, and they almost view going public as an exit. For us, this was really what I think going public should be meant to do, a capitalization event, an ability to buy another company. It was really, about that, not an exit, so to speak. So to me, that feels like the right reason to go public. I know it's easier to stay private longer now, so some are, but we felt like we were doing it for the right reasons.
Your rival, which is to say FanDuel, hasn't been sitting on its hands. It ended up being bought by a company you may have heard of, Paddy Power, and it's now part of an online gambling giant that includes, or will shortly include, PokerStars. Describe the competitive landscape in online sports betting and online gambling more broadly as you see it right now. Where do you fit into those worlds?
Well, I think so far it's interesting because FanDuel is obviously our chief rival in the daily fantasy sports world, and in the at least early days of this market, it's been the same thing in sports betting. Now, others will certainly come along. I know there's been a lot of companies that have been making moves and positioning themselves to the market. There's certainly a lot of interest amongst media, amongst other gaming companies to get into this space. So there will be competition, but right now it seems like it's mostly us and FanDuel. And I think if you conclude just the two of us across the various states that have online, excluding Nevada, I think we're well north of 80% of the market. Now, I also think that this is something that we observed during fantasy. There was a period of time, late 2014 through 2015, when it seemed like every media company, out there wanted to start a daily fantasy site. And same thing even decades before for season-long fantasy. So we're kind of, used to seeing that, and we think the right thing is you just keep your eye on the ball, which for us means ultimately winning on product, winning with the best customer experience, and innovating more than anyone else. And we think if we do those things, it really doesn't matter who we're competing with.
FanDuel is now part of this company I described. It has a name, Flutter Entertainment. Is that the kind of company you want to build, a digital conglomerate in the gaming space, or do you want to remain what is, in relative terms, a pure play?
Well, I think there's a lot of benefit to being a pure play right now because it's such a unique asset in the public markets. There isn't any other way for investors to purely play the space for sports betting. So I think that's a very attractive position. As time goes on, it's hard to say. The way I look at it is, you can have a vague or opaque vision of what you want to create, but whether it becomes a conglomerate, whether you do it more organically, however you sort of go about it really is largely out of my control. It's up to where the market goes, and we have to make the right decisions based on how we're reading the market. So, I guess in that sense it is within our control, but I think the right decisions are going to be what the right decisions are. And if you try to marry yourself too much to, I have to do it this way or that way, sometimes you miss opportunities and sometimes you miss the whole thing. So I think one of the things that's kept us, strong over the years and why we've been able to have the success we have had is being nimble. I never would have told you 3 years ago we would be focusing this much on sports betting and other forms of iGaming now. I would never have guessed 5 years ago that the major sports leagues would be advocating for sports betting legislation. Things change, and that creates new opportunities. And just take the Supreme Court. If the Supreme Court hadn't overturned the law, it would be a very different situation. So we think we're in a dynamic and changing and fluid enough market that we just have to keep all options on the table.
So the marketplace, as you point out, is changing. You're trying to get your best read on it. What might you be telling me 3 years from now that doesn't seem obvious today?
I'm very bad at predicting these things, but I could tell you what we try to do, which is we try to, instead of saying, here's what will happen, we try to say, here's a variety of different ways it could play out, and here's the best way to keep our options open so we can capitalize on any of them. But, I think there will be further consolidation in the space at some point. I think there probably will be, requirements around further integration of product and technology. I think right now we're in the strongest, or at least one of the strongest positions on that front, but that'll change over time as new innovative technology gets developed, so we're going to have to stay on top of all that.
How much of a differentiator is technology, and why are you abandoning, if you will, I mean, I know abandoning is a bit of an exaggeration, but you're leaving your current technology partner, Combi Group, behind and going with SB Tech?
I mean, we're biased, but we think technology and product are the most important things. It's really, I think, what wins and loses in the market. So that's, for us, the most important area of investment. It's where I personally try to spend the most focus when I can. Lately, I haven't been able to focus much of the business on the home front, but that to us is going to be what wins and ultimately what loses in the market. And you kind of alluded to this in your question, but we're not really leaving Kambi. It was more we wanted to own this. Being how important I'm saying I think product and technology is, to outsource it was not something I think would help us win over the long term. I think we would always have been handcuffed, and actually owning it is going to give us the control to be able to differentially focus on building out the best in-game betting, the best prop betting products for U.S. sports, which is one interesting element of this market. Because so many of these companies have been built overseas, the offering for U.S. sports is not comparable to the offering for a lot of sports that are more popular internationally. A lot of work to be done there, and I think a lot of companies that aren't squarely focused on the U.S. like we are feeling the pull of their home markets. So we see this as a big opportunity with this acquisition of SB Tech to really go all in on having the most robust and best in-game prop betting, everything for U.S. sports.
In the sporting world, the book Moneyball, goodness me, it's almost 20 years ago now,
just made me feel old,
woke people up to the importance of data. In finance, we're continually reminded of the importance of data. The emergence of the quant shop has revolutionized what goes on in the markets. Explain to us how you think about data and what your data strategy is.
So I'm, this is very close to home for me. My background is in analytics. My first job out of college, I was sitting at a computer pulling data and crunching numbers in spreadsheets. And I think, like everything, data and what you could do with it is affected by technology. So I think back then, and what we do is we'd pull data out of SQL, put it in an Excel spreadsheet, maybe create some customer segments, run some tests. Now all that stuff is personalized at the individual level through self-learning machines that know your preferences based on actions you've taken with the product. That didn't even exist, or if it did, it was not something that was on most of corporate America's radar screen back when I started working. But it's the same core concepts of being able to do two important things. And I think if you boil it down to this, it's really all it comes down to. One is to collect and manage and keep the data in a usable place, and people underestimate that. Collecting it and having clean data that you're collecting is hard. And then having it in a place that's accessible and usable and doesn't take, jumping through hoops to pull it out or hours and hours to pull simple things, also really hard, especially when you're talking about the quantum of data that we're collecting. Second thing is having the right tools, people, capabilities to actually be able to derive insights and utilize the data, whether that's individuals looking at numbers or machines that are optimizing based on what you're clicking on in our mobile app. It's still how you use the data. And, you know, very high level, but it's really that. And I think the one that people really underestimate is that first one. That is more than half the battle. If you have good, clean, usable data, if you have a testing platform that allows you to deploy tests without getting muddy results, and as any good analyst will tell you, the only thing worse than not looking at data is looking at bad data.
What kind of functionality have you introduced to the platform as a result of the data analytics you've performed?
So a lot of things, everything from little things like where should we put this button or what color should it be, to things like, you know, how do we optimize the entire user, you know, customer acquisition funnel. But almost everything we do at the company, really you could argue everything we do at the company has in some way a relation to some kind of data and analytics. Some of that, like I said, a lot of that now is done by machines. So we're not even, you know, as humans doing it anymore. Things like what order you see the contests in the lobby, things like what promotions you see are all driven by machine learning now.
I have to imagine that there's something of a battle playing out constantly at your company, as there is in other places, because you can learn so much about your users by virtue of the data that they create on your platform. It's effectively the Google versus, or the Facebook versus Apple debate. You know, wow, that's so amazing, we could do this. Where do you draw the line? In other words, maybe this is awfully cool, but might not be the right thing to do.
One of the core values of the company is do the right thing. So it starts with having ethical employees and making sure you instill in your company values good ethics. And I think most of us know the difference between right and wrong. I know in retrospect, sometimes it's easier to say, but even up front, most people know the difference between right and wrong. Secondly, it's having good policies and rules in place. We have a very clear privacy policy, and for us, really it comes down to, you know, if you're doing something internally for the purpose of better serving that customer and giving them a better experience, then that's a valid use of data. Certainly, we never would sell data to anyone externally. We don't do that. And if you're using it for any other reason than what I just described, then you shouldn't be doing it. And then obviously we have controls in place too. So while we all would like to rely on everyone doing the right thing, you need to make sure. So we have a lot of tight controls where we have a very limited group of people that have access to certain types of data. We monitor what people are looking at. We make sure if anyone downloads it onto a thumb drive or some other system, we're tracking that. You know, we're pretty tightly regulated on this stuff too, so it's not just us, it's the government watching over us.
The reality is, of course, that not everybody does the right thing. Anyone here who's familiar with The Bachelor in Paradise might be aware of the fact that one of its alumni, a woman by the name of Jade Tolbert, was a participant in the Millionaire Maker Challenge, Fantasy Sports Challenge on DraftKings, and just days ago was stripped of her $1 million prize. What's the story there, and how does that speak to what you were just telling me?
Well, you know, one, I think it's, you know, something that it was a little bit of a double-edged sword for us because, you know, at first it was like, wow, there's this whole new audience of people that now know our name and are paying attention to us that weren't before, and then it quickly turned into, you know, a bit of a headache. But, you know, at the end, what we try to do is make sure that all of our customers feel like the games are safe and fair. They could trust us. And those are incredibly important things to uphold. If you don't have trust, our product's pretty tough. We're asking people to come and take out their credit card and put money in and leave money in their account. And I think that alone, forget, you know, the actual games themselves, is something that takes a lot of trust. So it's very important to us to make sure that people know that we're doing everything we can to enforce the rules, and hopefully people feel like, you know, we're a trustworthy brand and a safe place to play.
DraftKings isn't yet profitable. I have heard that you're hoping to be profitable, not in 2020, not this year, but next year. Is that correct?
We haven't said when we're hoping to be profitable. It's hard to predict because so much of it depends on the pace of states legalizing and us being able to roll out our online sports betting products. That's going to drive a lot of, you know, the timing around it. So, you know, I think we can give you a pretty good picture of what conditions would have to occur, but harder to say when.
As part of the SPAC deal, you have put out some forecasts. and they involve some aggressive assumptions. You know, increasing revenue almost 9x over the space of some 5 years. You would have to command a fairly significant share of the sports betting market. As you point out, other states would have to follow those that have already legalized gambling, and those states, for the time being, do not include New York, they do not include Texas, they do not include California. And if all of that happens, you hope to get to something like $1 billion in EBITDA. But there's a long way between now and then. What makes you confident that those things are going to happen?
Well, I think it's less, confidence and more, this is what it would look like if they did. I'll leave it to everybody else to predict when and if. I think the secular trends here for us are very positive. I view the fact that the top 4 states in the country still have not legalized online sports betting as an opportunity. I think it's a huge amount of population that's still out there that hopefully will be, lobbying their own politicians to do this because they want it in their state. And I think as more states do it, it'll become more comfortable. The template will be clear. It won't be as hard to figure out. So that's our hope. And I think what we tried to do in our presentation was paint a picture of what it would look like if that were to occur. But as you know, very hard to predict when or if any government's going to do anything.
Critics of online sports betting tend to focus on a couple of main concerns. One is that moving gambling into the digital domain only makes it easier for people to become addicted, and that the addiction creates a social cost and somebody has to bear that cost, not to mention the human damage it does. And the second is that because online access is making betting so much more pervasive, there's a far greater risk that it's going to corrupt the sports on which these wagers are based. Do you share those concerns? And if you do, what are you doing in your seat to mitigate them?
Well, ironically, I actually think it's the exact opposite. And I'll tell you why. What people forget when they make those two arguments is that this is already happening today. And it's already mostly happening online. I can open up my phone or computer and go to any number of websites hosted somewhere overseas, maybe in the Caribbean or somewhere else, and I can make bets. I can call up a bookie. I can make bets. Most of the bookies now have online websites that they use. So this is already happening. What will happen when you bring it into a legal and regulated light is you'll actually start to put some protections around these things. What happens now if some random website in the Caribbean takes your money is you're out of luck. Nothing you can do. Not really, what a consumer who wants to feel safe is going to want. I think what happens in a legal, regulated world is you call law enforcement, and they help you take care of it. Same thing on the integrity side. If you have some weird, suspicious betting activity at some other illegal book, they don't call the authorities. They just shut down the betting line because they don't want to lose money on it. We actually call up the authorities. We report it. What I think you'll see is more things get caught that maybe are actually flying under the radar today, and I hope that doesn't turn into a perception that it's happening more. But I actually think, if anything, first of all, I don't think it's terribly pervasive to begin with, but I think what is going on, this should help root it out, and this should help protect consumers and help reduce any social harms. And that all means we have to do it the right way. There's a responsibility on our end. We've established a responsible gaming team, and it's one of the big areas of investment for us in 2020. It was a big area in 19 also. We're hiring up there. We're putting a lot of effort into creating algorithms and other ways of monitoring things. This is a big area of focus for us because, this is probably the one thing that can go sideways. Well, there's always more than one thing, but this is a big one. And I always tell my